Have you ever wondered what would happen if Wall Street's grip on the housing market suddenly loosened? Today, we're diving into a hot topic in the real estate market: the potential ban of Wall Street hedge funds from buying homes. This proposed legislation, the End Hedge Fund Control of American Homes Act, has been generating a lot of buzz and could significantly impact home prices across the country. Let's get real here. Over the past few years, Wall Street hedge funds have been buying up homes left and right, driving up prices and creating a squeeze on inventory, especially in certain neighborhoods. Data from Redfin shows a dramatic spike in investor activity during the pandemic, particularly in cities like Las Vegas. But here's the catch: if these hedge funds are forced to sell off their massive real estate portfolios, the impact could be huge. Experts predict home prices could plummet by 30 to 50%, leading to potential crashes in some markets. So, what's the deal with this bill? The End Hedge Fund Control of American Homes Act would impose a 10-year sell-off requirement on hedge funds holding single-family homes. If they fail to comply, they'll face a whopping 50% tax on the value of their portfolio. This could have a major impact on specific cities and zip codes where investors are heavily concentrated. Before we start predicting a real estate apocalypse, let's look at the signs. Investor purchases are already dropping, and I've got real-life examples of Wall Street giants like American Homes for Rent selling off properties. But hold on a minute. There are already signs of investors pulling back. Investor purchases have plummeted by 65% from their peak, and we're even seeing examples of them selling properties, like the recent sale by American Homes for Rent in Henderson, Nevada. This suggests the sell-off might be happening incrementally in different markets. Now, it's important to acknowledge that the bill's impact might not be as drastic as some predict. These hedge funds only own a tiny fraction, around 0.6%, of the entire housing stock in America. Additionally, the bill only addresses a small portion of investor demand in the housing market. Instead of focusing solely on hedge funds, perhaps we need to consider broader solutions. One suggestion is removing tax advantages for real estate investors altogether. This would level the playing field and potentially curb investor demand across the board. However, critiquing the bill itself, it only targets a small percentage of investor-owned homes and might not tackle the root issue of investor demand in the long run. To understand the potential impact better, let's look at some specific cases. For example, Invitation Homes, a major investor, has purchased numerous properties in Las Vegas. However, with declining rents and rising interest rates, their profitability is taking a hit. This situation potentially affects both large and small investors alike, creating uncertainty in the market. Cities like Las Vegas, Phoenix, Atlanta, and Jacksonville are particularly exposed to potential home price declines due to high investor activity. Data from Redfin reveals concentrated investor presence in these areas, especially in lower-income neighborhoods. Here's something interesting. An overwhelming 81% of viewers who participated in our recent poll are in favor of banning Wall Street from buying houses. This suggests bipartisan support for the bill among both homebuyers and real estate investors. The stock market hasn't reacted dramatically to the legislation. Companies like Invitation Homes haven't seen significant drops in their share prices. This raises questions about whether the bill will pass or if it's more of a symbolic gesture by Congress. So, what's the verdict? Will this bill actually pass and change the face of the real estate market? Only time will tell. But one thing's for sure: the conversation about Wall Street's role in the housing market is far from over. I encourage you to share your thoughts and opinions in the comments below. Don't forget to subscribe to the channel. Thank you for watching.